What an eventful day today, ladies and gentlemen, between Fed Bowman that says we may be ready to cut rates in July. We'll talk about that here in this video. Iran attacking U.S. bases in Qatar. Essentially, the U.S. shooting down those missiles. Qatar forces shooting down those missiles. It doesn't look like there were any impacts or casualties or injuries. That is what is sending oil markets down almost 5% today. Very bullish for markets. And, well, Tom Lee. We have a new clip out on CNBC as well from him. So we have a lot to get into here in this video. Ladies and gentlemen, hit that like button and subscribe to the channel. And let's get started. But first, if you guys want to come trade with us live in real time every time I make a trade, check out that link down below in the description of this video. We did play energy today. That was a pretty wild trade nonetheless. But what we're really doing over there is finding those under the radar, those small cap stocks that nobody knows about. A lot of them are terrible. Okay, a lot of them are bad, but some of them are doing big things that are doing well, that they just don't have the retail base. They don't have the analyst coverage. So they go highly under the radar until they don't anymore. And by the time they don't anymore, that's when everyone catches on and the stocks go up 10, 20, 30, 40, 50x. I just put out some due diligence last night that shows one specific stock I think is ready to explode at any moment. If you guys want to check that out, obviously I'm not a financial advisor, so come to your own conclusions. Do you confirm the due diligence for yourself, all of that. But link down below in the description of this video. Let's go ahead and get started. Take a listen to this 2-minute long clip on CNBC. Fed Michelle Bowman says it's time to consider adjusting rate policy. This is sending the odds of a July rate cut soaring higher today.
David, thank you. Fed Governor Michelle Bowman saying that if inflation remains contained, she would support lowering rates in July, becoming the second Fed official, actually second Fed governor as well to say so. She says it is time to consider adjusting the policy rate. The data, she says, have not shown clear signs of impacts from tariffs, and the progress on tariff negotiations could lead, as she expects to lead, to a less risky economic environment. The tariff impact could take longer, be more delayed, and smaller than expected. Higher prices from tariffs are being offset by other factors. She does talk about the current conflict in the Middle East, saying it could lead to higher commodity prices. Part of another section of her remarks where she just still has some concerns about inflation. But overall, she says we should put more weight on the downside risk to employment. Guys, this is a particularly significant development when it comes to how the committee is thinking and where it may be moving.
I know we don't want to go here, Steve. Fed is not political, right? They don't make their decisions that way. However, it is notable that she, is Republican, appointed by Republican president, another one, who is looking through the tariff price increases, while some of the Democrats on the committee, Adriana Kugler, for instance, the governor who was appointed by the Biden administration, are more worried about the inflationary effect. It's sort of like what we see in the University of Michigan sentiment.
Yeah, I mean, you could definitely have that. You could definitely do that delineation. It leaves Powell a little bit of an odd man out in that regard, Sarah, because he seems to be also more worried about tariffs and more wait and see approach. I think it's a bit about taking a flyer on Trump's policies and the extent to which Fed officials are willing to roll the dice and go with the data that they saw in May and part of their forecast. Bowman, I also should say, mentions deregulation as a possible source of containing prices down the road and other policies that are out there. So she's pretty positive on that. And, Sarah, when it gets to the idea of, well, who does the president want in the driver's seat on the Fed? Someone who believes in their policies. And I think that's where they maybe cut. There may be politics, but it also may be a factor of being cut from the same cloth.
So that was also another big shift today and big news for markets. It now leaves the odds of a July cut on July 31st at 23.5%. Current odds still favor a pause through July 30th at 76.5%. But these odds last week were like 97% chance of a continued pause. So you're up a lot in just the last, couple of days in terms of, the odds of actually getting a cut. If you get another Fed official that joins them, or maybe another one, then you could pretty shortly here be pricing in a cut for July. Now, also in the news today, Iran moves launchers for a possible attack on U.S. forces, according to the Wall Street Journal. And there has been a credible Iranian threat against the U.S.-run Al Udeid Air Base in Qatar since noon on Monday, according to a Western diplomat. And according to Axios, the Trump admin is preparing for Iran attack on U.S. Gulf bases. And China urges citizens in Qatar to avoid Al Udeid Air Base. So they're very publicly announcing what the retaliation is going to be. It's really just a matter of time and a matter of, does anyone die? If nobody dies, if no U.S. personnel are injured, then this might be just a retaliation and over for now, which could actually be positive for markets. I mean, this is kind of how Iran works. They don't want a full-scale war with the US. That is not in their best interest. But they also don't want to look weak on a global stage, or most importantly, to their citizens. Okay? So they have to do something. And again, they're not like the US that is going to do it and then announce it later. They're going to give plenty of warning to US officials that an attack is coming. It says here that U.S. jets are scrambling over Saudi Arabia. It says French fighter jets along with British jets are now active over the Middle East. And Fox News is warning of an imminent threat of Iranian attack on Al Udeid Air Base in Qatar. Iran's president says, "We neither started the war nor wanted it, but we will not leave the aggression against Greater Iran unanswered." And the airspace over U.S. Al Udeid Air Base in Qatar is now officially closed, according to a new NATOM. It says the UAE is planning to shut its airspace too, according to a reporter on X. And Turkish companies cancel flights to the UAE. So this is coming literally any minute. It says the Americans evacuated planes from the base in Qatar in advance, according to satellite images. Again, they're going to give a warning to get people out of that base so they don't escalate the conflict. Iran does not want a war with America. And this news says Iran is preparing to fire missiles at American bases in the coming minutes, according to an Axios reporter on X. But again, I will just reiterate this headline that says there has been a credible Iranian threat against the U.S.-run Al Udeid Air Base in Qatar since noon on Monday. So again, they're giving a heads up that this is coming. And I would imagine they probably gave a heads up over this weekend. So it is confirmed that 3 missiles fell directly on the U.S. Al Udeid base in Qatar. And reports of sirens are still sounding at all U.S. bases across the Middle East, including Syria, Iraq, Jordan, Saudi Arabia, Kuwait, Bahrain, Qatar, the UAE, and Oman. Trump is currently in the Situation Room with Defense Secretary and Joint Chiefs, CNN citing an admin official. And it's being rumored that Iran launched 10 missiles towards U.S. bases in Qatar. Iran's Tasnim says missile operation is called Annunciation of Victory, launched against U.S. bases in Iraq and Qatar. But you can actually see oil is selling off pretty dramatically now, down almost 3% today, which this could be seen as a one and done. Iran, retaliated. If nobody died or whatnot, then the U.S. doesn't have to retaliate, and we can start to get more towards a diplomatic resolution. Again, judging on energy, it does seem like the worst of this situation is probably behind us. Now, just as expected, Qatar says there are no casualties from the attack on U.S. military bases. Qatar says they reserve the right to respond to this blatant attack. Iran's top security body says armed forces used the same number of bombs that the U.S. had used in attacking Iran's nuclear facilities. And it's being said that U.S. aircraft takes off from Saudi Arabia's air bases. And there were, again, no casualties from attacks on U.S. military base. So that is really bullish from a market perspective. Qatar says they intercepted a missile barrage on Al Udeid Air Base. Qatar says no incident, no casualties from missile attack, so it doesn't even look like a missile actually hit the ground. Qatari Ministry of Defense says we confirm that the airspace and territory of the state of Qatar are safe and that the Qatari armed forces are always on alert. And markets are bouncing following this news. Looks like energy markets are also selling off, which is a sign that maybe the worst again is behind us and we can get back to negotiating. Now, the CNN Fear and Greed Index is now back into neutral, coming in today at 54. So back into neutral territory. The percent of stocks that are trading above their 50-day moving average back down to 60.86%. Still kind of on the higher side, but back to more of a normal range. And the latest AI investor sentiment survey shows bullish investors at 33.2%, bearish investors at 41.4%, and neutral investors at 25.4%. So you still have bears that dominate this market in terms of sentiment, which leaves me to believe there's still quite a bit of upside in this market. And as I've said before, you really want to watch the 588 level on the SPY. That is kind of where I have this trend line here. If, well, I guess it's technically a little bit lower than that. It's around the 587 level. If you can stay above that, situation looks still pretty constructive. If you break down below that, then you fall into the 570s and come down to your potentially 200, 100 or 50-day moving average. Now, Tom Lee says that uncertainty about Iran's reaction is an overhang that markets are waiting on. Well, now we have that reaction out of the way. Let's see what Tom Lee says about what happens following that.
Some session highs, every sector currently green except energy, led by consumer discretionary this morning. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, Head of Research, and Fundstrat Capital Chief Investment Officer, also a CNBC contributor. Tom, it's good to have you. Welcome. Talk about confounding expectations, wouldn't you say? What do you make of this morning's action?
Well, you know, in some ways it's not a surprise because, as you know, like Art Cashin had the adage, sell the buildup, buy the invasion. And I think today is an example of that markets were kind of already nervous and anxious, and we've already saw de-risking, and the VIX was already elevated. So I think in some ways this is probably pretty typical.
Does it change your call for the rest of the year at all? And you think it displaces any other priorities or has any effect on bill passage or how that might get constructed?
Yeah, in some ways, it actually strengthens the case for stocks to do better into year-end because at the start of this year, we would have said U.S. bombing a nuclear facility is a black swan. Oil would be 120, stocks should be down 10%. And then we have the event, and oil is not really surging, and stocks are up. So I'd almost say that you've put another stress test into the market. We've seen it pass it, and I think it means stocks should do pretty well into year-end.
You think Hormuz remains a risk?
I do, but you know, Brian Sullivan was off camera was mentioning a lot of strategic reasons why that may not be the case. I'm sure he's going to have his views, but I would say I'm watching oil, and if oil isn't surging, then I think it just means that the risk of the straits being closed is lower.
I guess when you think about the impact for U.S. stocks and bonds and the dollar, it comes down to growth and inflation expectations. And the key, Tom, is whether either of those things have changed in light of recent geopolitical events.
Yeah, and as you know, core CPI doesn't include energy. And as you know, when the ECB looks at core inflation, they exclude housing. Housing is not part of ECB's core CPI, and they're cutting. If you calculated U.S. CPI on the same exact basis, it's lower than Europe. So I do think there should be a dovish tilt towards the Fed, or that's the upside opportunity into year-end as well.
Tom, there seems to be a speculative nature to the market that's creeping in again. I wonder if it's a concern. And when I say that, I'm talking about the reception of some of the IPOs. I mean, granted, very well received, but Circle's now got a $62 billion market value. CoreWeave, almost $90 billion. You got a lot of SPACs coming back. I don't know if you've seen it. Yeah. Even Chamath is coming back with some SPACs. Any concern to you or no?
It is. I mean, those are echoes of 2021, which is some stocks get fantastically bizarre valuations, and I'm not naming any. And
you want to name some?
And then there is signs of speculation. And but the one thing that was true in 2021 that's not true now is when I meet with fund managers, in 2021 they said there was no stock they could buy because everything was expensive. That's actually not true anymore. Now the people I talk to are saying, look, the numbers have been better and numbers are going up, but the macro is making them uncertain. So there's actually a lot less risk taking by institutional investors.
So to the extent a speculative part of the market is something you monitor, it's not hitting a level that is that concerning to you.
Yeah, I mean, to me, David, it's a sign that the cohort that is speculating are the ones that bought the dip in April. As you know, it was retail, the Robinhood community, that was buying in April when institutions were selling and raising cash and high net worth was raising cash. So it's the same crew now that is buying, the Circles at one time's assets under management, which is tremendous, but it's not speculation to me yet because I'd say high net worth is not really that invested and institutions are still pretty cautious.
But what is the underlying view that you have that makes you bullish? Is it that the economy's hanging in? Is it that earnings are picking up? What's the fundamental reason?
I think when we look at macro, on the margin, things are better. We have better visibility on tariffs into 2026. We have regulation and tax, legislation visibility into 2026. I think the Fed is now being questioned about their unwillingness to cut. I mean, it was apparent 5 out of the 10 questions during the press conference were about that exact question. So there's a dovish Fed. I know consumers are overly cautious right now, but as you know, inflation expectations are far above CPI. That's a positive surprise if delivered inflation's lower. And then businesses have been really resilient. I think actually the economy might be weakening, but earnings have been better. So overall, with all the cash on the sidelines, I would say we should be quite bullish, actually.
Tom, we'll talk again soon.
Tom Lee definitely makes a compelling argument, to say the very least. Now, the S&P actually is ripping following the retaliation on U.S. bases. And again, that really just has to do with, is this conflict over? Can we come to a diplomatic, end to this? Energy prices obviously falling about 5% as well, builds to some of that bullishness. Tomorrow we get a speech from Powell, hearing how, Bowman was today and Fed Waller was, what was that, on Friday? Then, is Powell bullish? Is he a little bit more dovish? I think the Fed really messed up the last Fed meeting by moving away from the data-dependent approach, okay? Because the Fed is now in a more opinion-based way of doing monetary policy, which is unprecedented. Probably a bad thing to have, let's say, 12 people, handful of people deciding the interest rates for the economy based on their opinions. So I think you're going to see a larger division within the Fed, and Powell speaks tomorrow. That's really the big catalyst, at least for tomorrow. And we'll see if Powell's more dovish or more hawkish. So let me know your thoughts down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.